I have the neat opportunity of traveling around the country doing this, so I love it when I'm actually pretty close to home. And I've done this for a lot of other independent agencies like Connell. And I learned really over the last 6 months or so a lot about Connell. And I've got to say, this is a pretty neat group. And they may have taken care of me being here today, but they are not paying me to say that. I think the sheer fact that they do stuff like this and some of the other things that I've learned about their team says a lot about that agency. So I just got to say that. Hopefully I embarrassed Tom a little bit there. But the missing ingredient of wellness programs. How in the world can we take this type of program and actually help the employees and the employer at the same time? It can be done. I was at the HR Southwest Conference in Fort Worth, Texas about a month ago. And I was at a cocktail reception the night before, and I met somebody who was in HR, and she said, "Oh, what do you do?" I said, "Oh, I'm the president of a financial wellness company." "Oh, you guys do 401ks? No, we don't." "Oh, you guys do group benefits?" No, nope. "You sell products?" No, also not what we do. The tough part about financial wellness programs is that it's still a fairly newer industry. It's an unstandardized industry. So by the time you're done, you will have a much better grasp of what in the world that you are talking about when you say financial wellness. And also, sometimes I'll talk to people and they say, "Oh yeah, we have a financial wellness program." "Well, what is it that you do?" "Oh, once a year someone comes in and talks to our employees about wills and trusts and retirement, etc." "Oh, great, what else?" "Oh, that's it." What you really have is a financial literacy program, not a financial wellness program. And I find that is the #1 misconception about financial wellness. Many people think it's just about education and literacy. It actually isn't. So we're going to go through this here. The last thing I'll say before I jump into the slides is the toughest part about being a speaker is I have no idea what your background is. Some of you are in HR. I met Roy, who's a CFO in the back here. Some of you are business owners. Some of you are with municipalities. Some of you are with big companies, small companies, and everything in between, nonprofits. I guarantee you everyone will walk away with something. It's going to be different. You're all going to walk away with something different, but you'll walk away with something of value. I guarantee it. I absolutely guarantee that. These are my two identical twin boys, Bruce and Dominic. Why in the world am I showing you this slide? I'm going to give a lot of personal examples as I talk about this. I like telling a lot of stories to make a good point. And who doesn't love showing off their adorable kids, right? There's those two right there. So whenever I'm giving these personal stories, you kind of get an idea who I'm talking about. My dear wife, my wife, I love her to death. She's the one taking all these pictures, so she's not in many of them. But when we found out we were having twins, anybody here have twins? Oh, God love you. I know you know what that first 6 months was like. But when we found out we were having twins, we talk about financial stress. The first thing that goes through my mind after I pick my jaw up off the floor is, oh my gosh, 2 colleges at the exact same time. And then I thought, oh my gosh, what if they're girls? 2 colleges and 2 weddings? Oh my gosh. But then when we found out they're boys, I thought, there's 30 grand that we don't have to save for long term, right? Now, we have a lot of fun. Our first and last 2 children right there. All right, a little housekeeping. There's me. Nice to meet you. Got questions? Blurt them out. There's the book. Okay. Today's goal is why financial wellness. Let's first build the case. Let's first build the case for financial wellness. Why would we do something like this? Why is it important? Why is it becoming popular? We're going to talk about trends and best practices. What are other employers doing? I'll show you what has worked and what hasn't. And I've seen a lot of what works and what hasn't. Understanding vendors. Understanding vendors specifically in the financial wellness world. Because again, it's unstandardized. It's very difficult to pick apart who they are and what they do. And who are my CFOs in the room? We got 1, 2, very good. I know Roy's around here somewhere too. We're going to talk about that. I know especially the CFOs want to get to the ROI part. Part of it's about doing good by our employees, but part of it is, we're a business and we have to also think about the bottom line as well. Financial wellness defined. So before I talk about what is a financial wellness program, let's talk about what it isn't. Some of the common misconceptions that we often see. Occasional lunch and learns. All right. So I gave you the example right when I started about once a year someone coming on site and talking about various topics, right? That's okay. There's nothing wrong with doing that. I encourage it. It's better than doing nothing. But let me ask you this. Let's say you had a nutrition expert, a nutritionist, come in and talk about the food guide pyramid once a year to your employees, do you think that is going to change behaviors? No. We all know this stuff. We all learn, what they call it, my plate now, right? Not the food guide pyramid. It'll always be the food guide pyramid to me. We know it. It isn't knowledge, folks. We know we're not supposed to smoke. How many people have a lot of smokers at their company? We know we're supposed to work out every day. Does it always happen? I don't know. We know we're supposed to eat healthy. Knowledge isn't the problem. Occasional lunch learns are okay, but that is one ingredient of the recipe that I'm going to teach you today. I'm giving you my whole cookbook. Number 2, annual 401k meetings. We got a 401k specialist here in the front room. Say hello to everybody. Thank you. You need to absolutely have, for 404C Department of Labor compliance, have at least annual 401k education about the specifics of that plan and the options within it. That in and of itself I wouldn't consider a financial wellness program. It is a crucial part of the financial wellness program. You need to include that with it. And EAP referrals. The reason I can speak to employee assistance programs is, so I'm the president. We do have a CEO, so I don't run the whole company. And we got our roots started back in 1986, working with 2 pretty big EAPs in the Midwest. And back then, the EAP said, you know what, we get all these calls about financially stressed people. Can you guys take the calls? We can't take them. He said, sure. And then over time, it transformed into what we're doing today. Well, what happens typically when one of your employees is calling up that 800 number with the EAP? Has tragedy typically struck already? Yeah. We want to get ahead of financial 911 so that they don't have to call the 800 number in the first place. So those are good. I'm a huge fan of EAPs. We work with EAPs across the country. However, it is not in and of itself what I would consider a financial wellness program. So what is it? The definition, by the way, if you go to Wikipedia, it's not there. I'm still trying to push them to adopt our definition. But it is an ongoing program which educates and motivates employees to make positive changes to their personal finances and stay accountable to goals. That really is the true definition of a financial wellness program. You're going to see what the italicized words really mean as we get going through this program here. All right, yesterday's wellness model. So let's talk about wellness in general for a second. It started with physical, didn't it? Well, let's even go before that. You go back to the 80s, companies really didn't talk much about, most of them, didn't talk much to their employees about physical health. That's kind of your business. I'm not going to get involved with it. You just come to work, do a good job, and it's a good relationship. Then over time, healthcare costs kept doing this exponentially, right? Then employers started saying, maybe we should get involved just a little bit. This is an abbreviated list of some of the things that might be included in a physical wellness program. How many of you do at least one of these things at your company? Yeah, most of you. Very good. Very good. Then employers realize, you know what? Maybe we should also include mental health. We have stress, depression, anxiety. These things cost the company money. We can't ignore it. It actually does cost the company money. So we need to have a well-rounded wellness program with all of the things that are included on the screen, or most. Then fast forward to today, and really this has taken off over the last 5 years, I'd say. Now employers are realizing that it is a 3-legged stool. Without all 3 legs, the wellness program really has fallen over. And that's an abbreviated list of some of the things that would be in a financial wellness program. Without true comprehensive wellness, that includes all 3 of these ingredients, the program just isn't going to be the right program for us and deliver the ROI that we really want. This is my favorite graphic of the entire program. I'm throwing it at you early. Why do I love this? What you're looking at on the screen here is a test group. I'll try not to yell at my microphone here. A test group of 2 different groups of individuals. What this survey did is they interviewed people and said, tell us about your physical and mental health. Now tell us whether you feel financially stressed, average, low financial stress. Tell us about these things. What you'll see on the screen here, in blue, is the group of people who said they have low levels of financial stress. In red is those individuals who said they have high levels of financial stress. Look at the manifestation of physical and mental illness in the body when financial stress is high. Severe anxiety, that's a 7-fold increase. Severe depression, migraines and headaches. We have our director of marketing has unfortunately suffers from pretty severe migraines due to some other medical related issues, but I had no idea how debilitating those were until I saw what she goes through every day. And let's face it, it's also can be a drain on some productivity at the office. These things affect the people, obviously, but it also affects the business. Even heart attacks were double in the high financial stress group. This is the reason it's not ignored anymore. Employers have realized it has to be physical, mental, and financial because it manifests itself in the body. All right, this is the prevalence of obesity in America. So I'll tell you a quick story here. So my wife is originally from Russia. She came here for school for 6 months. It turned into 12. It turned into 2 years. She met me, and her mother has never forgiven me. But we go over to see her family once in a while. Well, when we were in France a couple of years ago, I'm sitting there talking to people, and I had never been to France. Beautiful, beautiful area. We actually went to Paris. And we're there, and I'm talking to people, and they'll say, what do you think of Paris? I say, oh, it's just beautiful. We don't have this history and this architecture like you do. I say, well, have you been to the U.S.? Yeah. I say, what did you think of the U.S.? Everyone's so big. I just got done complimenting your entire country, and that's the first thing you say about America? What about our technology and the mix of cultures that we have? Really? That's what you think about? Well, maybe there's a little bit of truth to that, and sadly, that's what people see. And this is the reason that employers are focusing so much on it today, right? Because we want to get those healthcare costs down and those premiums down in the plan. And this is what has happened since 1960 till recent years. Now, this slide I'm showing you is the debt problem in America. This is the amount of mortgage debt outstanding by millions in the United States. This goes through the same time period, 1960 to current. Now, what you see on the screen is that when we went through that, remember that real estate crash where all of our homes went down in value? Remember that? We hit this cusp. Now, it is coming back up to record levels. In fact, anybody here, I'm not going to, if you don't want to raise your hand, you don't have to. Front row, you're safe, I told you. You are safe harbor. Now, anybody in here remember the home that they lived in 1975? Yeah, a couple brave people. All right. For those of you that raised your hand, do you remember that home just being just terribly small? You just couldn't stand living there? All right, we got one person shaking their head. Most people, for those of you who didn't shake your head, you're probably thinking, we made it work, right? It was a smaller house than I live in today, but we made it work. The average home in 1975 was 1,600 square feet. The average square footage of a home being built today, this is average across the country, is 2,400 square feet. Are we buying homes with cash now? We are financing them. We are borrowing that money. Now think about this for a second. This chart can go up over time because of inflation. It's normal that we have to borrow and take out bigger loans because homes go up in value. That's normal. It's inflationary. But the size of a house is not inflationary. That should be static unless we're becoming bigger consumers. Think about a car in 1975. The cars we drove, think about a sedan in 1975 and a sedan now. Are they that much bigger since 1975? No. They got the same 4 doors. Our homes, exponential growth. It's a 67% increase since 1960, by the way. Anybody see a correlation between my two charts? The obesity chart and the debt chart? Yeah. We're becoming larger and larger and larger consumers in America. And this is not only affecting families, it's affecting our businesses. Which, by the way, I know many of you are HR, not all, many of you in this room are HR. I get to have both ends of this conversation. I talk to HR professionals all the time and understand the challenges that you face because you have a great idea you want to implement for your employees, but you got to get it through the CFO and the owner and get approval. And then, as part owner of the company, I'm on the other end going, yeah, we got some great ideas, but we've also got to make sure that we're paying attention to the bottom line. I see it both sides. So we are going to talk fairly extensively about how do we justify focusing on programs like this. How do we make it good for the business? Because it is affecting our businesses. I told you earlier, you got a question, blurt it out. My infinite wisdom's out of here in a minute, 1 hour and 9 minutes. And I'm on the way home. Major causes of financial stress. So over time, 30 years, we have been tracking the reasons that people call from EAPs. And this is, these are some of the primary reasons. Now, number 1 and number 2 are debt and retirement. Those are the primary reasons that your employees are stressed about money today. And I can say that with confidence because of all the data that we've looked at. But this is still an abbreviated list. Here's the full list of reasons that people find stress in money. Now, as time has gone on, think about your life for a second. As time has gone on, has your financial life become less complicated or more complicated? More, right? As time goes on, it doesn't get simpler, it becomes more complex. And that's the reason that today, many of us can easily become stressed out by trying to coordinate all these things that we have. All right, I'm not the only one that has made the health-wealth connection here. 70% of HR professionals feel that personal financial concerns have an impact on employee performance. That's out of SHRM. How many of you are, that are in HR agree with that statement? All right, that's at least 70%. Very good. Positive changes in financial behavior related to positive changes in health. Dr. Kim from the University of Maryland. She's actually done a lot of really neat research in this field. And then the Stress in America survey. Every single year that the American Psychological Association has ever done their Stress in America survey, money was found to be the #1 cause of stress. Every single year. Anybody ever read that report, by the way, the Stress in America survey? I'm the only one that reads that boring reading on Friday nights. I actually would recommend reading it. If you got 5 minutes to flip through it, it actually is kind of interesting. I'd highly recommend that. Now, if you're not much of a reader, or you don't want to read something boring like that on the weekends, what I would recommend doing, and what I'm about to tell you literally changed my life. I'm not kidding. This changed my life. If you are a Netflix subscriber, go to Netflix and look up a National Geographic documentary called Stress, Portrait of a Killer. Stress, Portrait of a Killer. National Geographic. This was actually spearheaded by a world-renowned neuroendocrinologist, a very intelligent scientist. And in this National Geographic documentary, they looked at what happens in the animal kingdom and what happens in human beings when they have elevated periods of stress. What was interesting is that it's normal in the animal kingdom for, let's say, a gazelle who's out in the wilderness to be chased by a tiger, and you bet that stress level has gone up. But by the time they outrun the tiger and have gone to safety, stress diminishes. But when they looked at a group of chimpanzees, which have a similar hierarchy structure to something like a big corporation, you've got the alpha male or the boss or alpha female, you get what I'm saying here. You have a hierarchy of power like a corporation, and you have that in the world of chimpanzees. What they found were the chimpanzees at the lowest end of the totem pole had elevated periods of stress for long periods of time. And because of that, it actually affected their health tremendously. Almost none of them lived as long as the ones at the top. And they did the same thing with corporations, the people that were constantly stressed from work and from their commute home and traffic for an hour or whatever it was. Very, very interesting documentary. And the reason I say that changed my life is that was the point in time that I told my wife, I said, stress will kill us if it doesn't get knocked down over time. We literally sold our house the next year. I cut my commute down to 10 minutes. I love it. No highway. I battle a school bus in the morning, and that's it. And got rid of a bunch of other stressors. So again, it really can kill you. I'd highly recommend watching that documentary. All right, the Deloitte survey. Now, this is a little dated, and I'll tell you why. Deloitte used to do this survey each year. They would call their top employer priorities rewards, something to that effect. And they changed the way that they did it. But at least in 2013, this is the last way they did this survey this way. What they would do is they would ask a very large number of employees, and a very large number of employers, what are your top personal challenges? And it was interesting to see if they would match up. Number one, my ability to afford retirement. Number one. And that is still it today, by the way. The 2016 data that we see, it's still it today. People are worried about retirement. Number two, my ability to earn additional rewards that allow me to advance in real economic terms. What in the world does that mean? Pay raises, bonuses, advancement above inflation. That's what they're worried about. And number three, the future of my job. Outsourcing, technology, cuts. Any of those have to do with money? Every one of them. So we're seeing it directly from the mouths of employees. This is what they're concerned with, and it all has to do with our financial empowerment. Providing financial education in the workplace is good for the bottom line. Dr. Edmonston is kind of a rock star in the world of financial wellness. He's actually at the Kansas City Fed, which, by the way, it's pretty neat in the state of Missouri that we have 2 Federal Reserve banks. We're the only state in the union to have that. Not even every state has a Fed bank. But what I'm going to walk you through here are some statistics about what's going on with your employees. Now, if you're thinking, Travis, you don't even know me. How do you know what's going on with my employees? Because this is a pretty broad statistical research program. What we did is we interviewed hundreds of employees from across the country in all different parts of America. This wasn't just the Midwest or just the coast. Various household income levels. Many of them were earning between $25,000 and $100,000 household income, but you even have some folks that are between $100,000 and $200,000. So it's a very broad scope of America, about equal to male and female, various age groups. If you want to know what's going on with your millennials, I can tell you. All right, so here's some of the questions that we asked. What are the most important financial goals for you currently out of the options that we had listed? Many people think it's debt. Now, some of you may have wage garnishments or pay advancements that you do for some of your employees, and I know that can be so tough because in your heart you want to help them, but then you kind of open the door of doing that all the time. Well, it's actually retirement. That is the number one most important financial goal for your employees. Followed closely behind it at a third of the group was budgeting and debt. A third of the group said, yep, right now that's what I'm trying to do. Get a hold of my finances and get rid of debt. And then 22%, which really could be retirement or budgeting or debt, was overall planning. I just need to get an overall plan and get a handle on my finances. Does your employer have a wellness program? Now, let me ask you, generally, this is a very general question, how many of you have a wellness program at work? Okay, very good, very good. Here's what the employees said. 54% said yes. Yes, we got a wellness program at work. Whenever I do programs like this at SHRM conferences, when it's just purely an HR group, out of 100 HR professionals, usually 80% of them, if not more, will raise their hand. Yes, we have a wellness program. How in the world is it that your employees, only 54% of them are saying, yes, we have a wellness program, yet 80% of HR are saying we have it? They just don't realize what it is. They just don't realize what that program is. Is financial wellness part of it? 37% that had a wellness program said yes. Do you feel financial wellness should be part of the program? But the overwhelming majority of your employees said yes. 84% said yes, financial wellness should be part of it. Does your EAP, or do you offer an EAP? How many of you have some type of EAP? Hey, Tom, can we get some coffee in here, wake everybody up? Hey, Deborah, I know you didn't want to do those stretches, but I'm about to do it. I'm about to do it. How many of you have an EAP at your work? There we go. I'm waking you up now. Unfortunately, only 41% of your employees say they do. A third of them say, I'm not sure. Are you kidding me? You've told them every single year during open enrollment, you gave them the big packet when they came on board. Unfortunately, many times, a well-crafted benefits program can fall victim to poor communication. And I think that's what often happens with some of these things that I'm showing you. Does your EAP offer financial planning help? 57% said, I'm not sure. I just don't know. Which of the following employer benefits as applicable do you find difficult to understand? This is a brand new question. We had never done this one in our study, so I found it very interesting to see the results. 39% said retirement plan. I thought it was going to be health insurance. I mean, look at how complicated our health insurance world is. 39% it was actually the retirement plan. 35% said, nope, I get all of it. I understand all my benefits. Who do you think, what age group was most likely to say they understand all their benefits without a problem? I told you I have impeccable hearing. You can even whisper it to me. What was it over here? Don't be shy. We're all friends here. What was it? The young think they know everything. That's right. It was the millennials. The millennials were most likely to say, I get it. I don't need help. I understand all my benefits. 26% said health insurance. Again, I really thought it would be number one. Then nearly tied was HSA and FSA, disability, dental, vision, and the other group benefits. I do think health savings accounts will become a much more prevalent part of our benefits packages that we offer to our employees. And again, I deal with some of the same issues you do. We have 72 people across the country in 4 states. So we deal with some of these same issues too. I think our HSA is going to be a much bigger part of our benefits programs and a crucial component of our health insurance programs. And that's when I defer other details to folks like Connell. All right, how well do you understand your employer's 401k investment options? This was also a new question. Extremely well and fairly well was up here. So here, let me make this easy for you. Really what we want to do as employers is get more employees to be in the orange area and try to get them out of the gray area. Blue is, so-so, fair, average. We want orange to grow and gray to shrink. Let's make this easy. Let's break this down a little further. What we then asked them, if you didn't have a financial wellness program, so if we took out the people who didn't have a financial wellness program and just looked at those, here's what we found. There's gray, that's not good. Here's orange, that's good. If they did have a financial wellness program, what does it look like? The gray shrank from 24% to 15%, and the orange grew from 14 to 22. That is precisely what you want. We just heard all about ERISA and the Department of Labor. You do not want to get a knock on the door about your 401k from the Department of Labor. I don't know, has anybody ever heard of a law firm, ma'am, I know you probably have, called Schlichter, Bogart, and Denton? They're about 3 minutes from my office. They're the leading national law firm to sue companies on 401k plan deficiencies. And they're right in our backyard, literally. They're the biggest ones nationwide. So we want our employees to understand these things more. We don't want them to go back and say, my employer never showed me or helped me understand these things. We want to be able to show in our Department of Labor file, our 404C compliance, yes, we did. We provide all kinds of tools to our employees. We gave them every opportunity. What could your employer offer to help you with your retirement goals? So let's just give them a menu of things to pick. They could pick any that applied. Number one, access to one-on-one guidance with a professional, someone that doesn't sell stuff, someone that's just going to guide me. 48%, the biggest group, said that's what they want. 38% said, I want more education. I want more information that I can digest on my own. Millennials were much more likely to pick that one. They love information, don't they? 37% said a customized retirement plan. Show me where I'm going. It's like a GPS system. Show me how I'm doing towards my journey. Am I doing all right? How am I doing compared to other people? A retirement plan. Next up was calculators and tools. Who in the world wants more calculators and tools? But I guess somebody out there wants more of these things, right? 19%, inclusion of a spouse or partner in the education that your company provides. Very interesting. So they're pretty much saying, I want my spouse to understand these things because they're usually not involved, or I want my spouse to be included in things because they're usually the ones that makes all the decisions. Anybody do that, by the way, include spouses or partners in some of your messaging? Say we got one, yeah, two, very good. I think you'll find that that's going to be much more commonplace. One way you can, and I'm sure you've tried to do this, if you've tried it before, is to do after-hours things or on the weekends and bring in spouses. It's really tough. I know that's really tough to do. Technology is going to be the driving force to allow spouses and partners to be more involved in the benefits education. Technology is just going to do it, especially videos. All right, if you can receive personalized guidance from a board-certified financial planner and your employer paid paid the fee, would you do it? 79% said yes. I don't know who in the world says no, but 80%, just about 80% said yes. This is also a new one and very interesting. I'm almost done with these. How likely are you to share in the cost of a workplace financial wellness program if it could help you towards your goals? I hear a number of companies say, you know, we want to offer a financial wellness program, it's just not in the budget right now to do. Let the employees pay then if they want to. 49% said possibly, 18% said likely. About a third, and you're always going to have that, about a third said unlikely. That's still a pretty good chunk, isn't it? This is actually larger than I thought it would be. This is my favorite and the last one. What is your average rating on your employer's, what's your average satisfaction rating on your employer's benefits package? 5.5% was the average rating. So on a scale of 1 to 10, 10 being the best, how would you rate your satisfaction of those benefits? Now, if they had a wellness program but with no financial wellness, it was 7.2. If they had financial wellness, that score shot up from 5.5 to a nearly 40% increase to 7.66. Why? I was the first member of my entire family to graduate from college. In fact, when I was about this tall, more like this tall, I guess, I watched my family go through some poor financial decisions and lived on food stamps for a while. I don't know, anybody in here ever had powdered milk before? Even on your, God bless you. Even on your Cheerios, it doesn't taste very good, does it? I'll never forget government support from lunch at school, and those were tough days. The reason I say that is the more education we can provide to people, the better financial decisions they can make. And if they're making better financial decisions, do you think they're going to be a little happier with everything they have going on, including everything at work? I think so. I think so. And I think that's why you see a lot of that. All right, here are some of the common benefits, and I know not all of these are common. These are some of the common benefits we might offer to our employees. I know pensions are turning into a dinosaur. Not everybody has a stock plan or offers 529s, but I'll bet you have just about everything else. Just about everything else. Did your grandparents' generation have an HSA at work? No. They didn't even have a 401k at work. As time has gone on and Congress has created more and more of these tools for you and I to offer to our employees, well, guess where they're getting them? They're getting them through work. They're getting them through work. When most employees today, when most Americans think about saving for retirement, they're not thinking about going to Scottrade and opening up a Roth IRA. They're thinking, my 401k plan, I need a company with a good 401k plan so I can get to retirement. That's what they think of today because we become so competitive. We want to offer the best benefits package that we're now giving them the whole buffet of stuff to choose from. And that's putting a lot of pressure on employers to manage these things and everything we just heard about earlier with our last speaker. But here's what's happened. As we add more and more and more, and Congress creates more tools, and it turns out that we as employers deliver them to employees, it's kind of like employees are going through this buffet line. They only have so much room on their tray, and they're going, I don't even know what to pick. How much can I put in the 401k, but I still want to use this FSA, and now I heard that we're about to roll this HSA thing out. And then my spouse has other stuff at work too. This is just way too confusing. Even though sometimes we do a good job of providing that benefits education, it can be overwhelming to employees. I will not say that we have a fiduciary duty to provide education on how to coordinate these things, but boy, we get a lot of value out of doing it. And I think my family would have made different decisions if they would have had the right education back in time. But I have no regrets. I'm actually quite glad that we grew up the way we did because it's the reason I feel so fortunate to be where I'm at today. Those are great lessons. All right, let's switch gears a little bit. Let's talk about the barriers to financial wellness. I'm not talking about the barriers for employers. I'm talking about the barriers your employees face. Number one is cost. 2, accountability. 3, priority. This is actually one of the biggest chapters of the book. All right. Number one, cost. So let's just say you and I decided we want to train ourselves to make better financial decisions. What could we do to get that, accomplish that goal? Well, we could go take a college course. We could do some self-study programs online, maybe read some magazines. Anybody have time for that? Anybody have time for extra community college courses on the weekends? No? Nobody? I don't know about you, but if I wanted to find out what was going on with my health, I'm going to go to my doctor. Now, about 5 years ago, I decided to go to WebMD and start researching what was going on with a health issue. And after wasting 2 hours of a Saturday, I came to the conclusion that I had 3 diseases I never knew about. And I still didn't find out what was going on. So I go into my doctor, I go there, I get the answer I needed, and I'm done. What's an average copay to go see a physician with some of your health insurance plans? Yell them out, please. 25, 30? Anybody higher? 37. Going once, going twice, anybody? 40. Anybody here 41? Go once. Okay. That's about right. 25 bucks to 40 bucks. That's about what it's going to cost to go see a physician, someone with tremendous knowledge and experience. Most Americans can afford to pay $25 to $40. Most can afford it. Unfortunately, we're not dealing with the same costs when it comes to independent financial professionals, people that aren't selling stuff. It's going to be between $100 and $400 an hour. I was doing this program in Chicago. Actually, we did 3 of these in Chicago this year. And one of those times, someone said, it's more like $450 to $500 an hour once you get into the city. Even someone that makes over 6 figures a year, do you think they're excited to pay $250 an hour to somebody? No. Someone that can't afford it, especially, is just going to bury their head in the sand. Or they're going to do what I do. They're going to look online, and they're still not going to get the answer, and they wasted their time. Cost is a major barrier for our employees. Accountability. All right, let's all be honest here. Again, you're safe. This is a safe zone. I don't pick on the front row. How many of you had a New Year's resolution this year? Come on, please be honest. I'm not going to pick on you. I just want to see your hands. We got some. All right. This is the honest side of the room. I didn't see one hand go up over here. Either you guys just don't do it, or you're not being honest with me here. All right. Here's the thing about New Year's resolutions. 78% of us don't stick to them. I don't care what it is. Quit smoking, go to the gym more, organize the Tupperware cabinet. I don't care what your New Year's resolution was, 78% of us don't stick. Why? We have lives. We have busy lives. We got daycare and grandkids and family and work and play and relaxing once in a while. But what if we had something that can hold us accountable throughout the year to say, hey, remember that thing that you decided on January 1? I know it's the end of March, but we can't forget about it. If we had something to hold our hand and keep us accountable, we're much more likely to be effective. One thing I wrote about in the book is a dear friend of mine, his name's Danton. He's about as tall as Tom. And you look at this guy, and he looks really athletic. But I mean, this guy was the opposite of athletic. He ate bean burritos for lunch every day that he warmed up in the microwave. And he never worked out. He couldn't run a half mile if you paid him $1,000. And one day he tells me, he goes, Travis, I just got a gym membership. I said, good for the gym. Well, a couple months later, he tells me, oh, I'm going to the gym. I said, you're still going there? So this can't last much longer. Before I know it, he is eating these unbelievably healthy meals. You can tell he's looking and feeling healthier. And I said, Danton, it's been 6 months. How in the world did you stick to that? He goes, I knew I'd fall off the bandwagon, so I hired a personal trainer. And he goes, all that personal trainer does now that I'm in shape is call me up once a week to make sure I did what I told myself I was going to do. That's all you need. Accountability equals effectiveness. Here's the problem with money. Anybody, you don't have to raise your hand, but I'll bet some of you in this room have, gone to the gym or tried a diet or something, and you told a friend to help keep you accountable. Hey, let's do this together, right? It's easy to partner. It's fun to partner. But this is one of the last taboos. You're not going to go to your coworkers and say at the water cooler, hey, make sure I pay off that big Visa. You know how much I owe on this thing? Can you hold me accountable to this? No, we're not going to tell anybody about that. Sometimes we're even afraid to tell our spouses about our debts. Accountability equals effectiveness. It's a major, major barrier. The last one I'm going to teach you about is priority. All right, I have to ask every time, any attorneys or doctors in the room? Okay, I can use my jokes then. I love picking on attorneys and doctors. So here's the thing about attorneys and doctors. We usually think of them as very intelligent people, and usually they are, right? We think of them as having an above average cognitive capacity, smart folk, in other words. I can't tell you how many broke doctors I've met. You mean to tell me that you've been making over $300,000 for most of your adult life and you don't have a penny to show for it? You know how many attorneys we've met that didn't have wills? Now think about that. When you go to law school, you learn about basic estate planning documents. Every single one of us in this room know what a will is. Every one of us. My kids are going to know what a will is in a couple of years. They're still trying to learn their alphabet. But how is it that an attorney, a very intelligent man or woman, doesn't have a will? One time, I even met an estate attorney that didn't have a will. And I said, ma'am, I've got to ask. How is it you do this every day for work, but you don't have a will yourself? And this is the answer she told me that I hear time and time and time again. Travis, I've been busy. We're all busy. I went to the DMV, the Department of Motor Vehicles, as much fun as that is. And the last time I bought my car, I brought documentation in there to add a payable on death agreement, or excuse me, a transfer on death agreement. By the way, if you don't have a transfer on death agreement on your car, next time you go to buy one, it's easy, it's free to do. TOD, transfer on death. And when I give her the transfer on death form, she goes, oh, it's so good you're doing this. I wish more people would do it. She goes, I still need to do mine. I said, ma'am, did you just start working here or something? She goes, no, I've been here about 12 years. I said, ma'am, I got to ask, how is it you work here and don't have it? Oh, I've just been so busy. It's not about how intelligent you are. I don't care where you went to school. I don't care how much money you make. It does not matter. It all comes down to making it a priority in our lives. My cell phone. I keep most of my calendar on this thing. How far in advance do you all make your social calendars? You know, birthdays, barbecues, parties with friends. How far out do you book these things? So all right, so you could do about 12 months in advance. All right. I'd say many of us are doing 6 to 12 months. What about retirement? Now, for some of you, that might be in a couple of years. Who knows? But for some of the youngest people in that room, that's probably 30-plus years away. I don't even think my calendar goes out that far on my phone. And it's the reason that 56% of Americans haven't even done a basic calculation to see where they're at. It's not staring at us in the face. That's why we're not worried about it. Priority also brings us to effectiveness. This is the reason that workplace financial wellness programs have become so popular. It brings down, if you do it right, it can bring down all three of the barriers that our employees face. Cost, economies of scale, it's typically employer provided. Sometimes you can do it voluntarily, where the employees pay, and they get a big discount. Accountability, you have goal setting and ongoing accountability. Now we're relying on technology to keep us accountable because of the taboo effect. We can't trust our coworkers and our friends to hold us accountable to our financial goals because it's private information. But you know what I love about technology? It doesn't have opinions about us. It can't say shame on you for how much debt you have. Where are my Fitbit people at? Anybody wearing Fitbits today? All right, there we go. Now you got what I'm saying. Yeah, Apple Watch, you got all these things. Accelerometers. Where are my accelerometer people at? I just don't say that because it sounds so nerdy, right? The beautiful thing about this technology that we're now wearing on our wrists and putting in our pockets is that it's keeping us accountable. As you're sitting in that chair, this thing might be blaring going, hey, you've been sitting here for 3 hours. What are you doing? Get up and stretch. Deborah, don't worry. I'm not going to do it. I'm not going to do it. And technology is finally doing this in the world of financial wellness. I'll give you an example in a bit. In priority, lunch and learns can, if done right, get your employees over the hurdle of priority. After someone sees a lunch and learn or a good, impactful program, usually they're motivated. But guess what? If that action doesn't take place within 3 days, not 3 business days, 3 days, what we have found is that motivation dies out. It's gone. It's just like when we go to a neat conference and we take all these great notes like we do. I've done this too, I'll be honest. If we don't take action, within 3 days, that motivation dies out because we got busy with other stuff in life. Lunch and learns can get someone over the sense of priority, but we have to have factors of accountability come in there. That's that New Year's resolution effect. All right, other trends and best practices. I'm going to actually skip that one in the essence of time. Benefits firms and consultants. I say this whether I'm talking to just HR people or I'm brought in by a place like Connell, but I'll tell you that you really need to lean on your benefits consultants and your brokers and producers, whether it's Tom or Jay or Greg or any of the nice folks that I've met here. They're the ones that can find innovative ways to accomplish these goals and sometimes even cut the cost down on them. Lean heavily on them. That's what they're there for. 401k providers. Again, you need to be having your 401k provider in there at least once a year for 404C compliance, education requirements. But they also need to be a part of the 401k program. Don't leave them out. They need to be a very important part of that. Also, and ma'am, you probably know more about this than I do. I might butcher the terms here. But if you go back to your company and you're talking to the CFO, you're saying, gosh, I found this really neat idea I think we could do for 2017. Let's start a financial wellness program. And the CFO says, how much is it going to cost? Right? Where are my CFOs again? One thing you might be able to do, if you have an ERISA budget account and you have the ability to actually pay for the financial wellness program out of 401k plan assets, it didn't come out of the company's general budget at all. I want you to keep that idea in your back pocket just in case you have to use it. It is possible, and the Department of Labor allows it to pay for a financial wellness program out of 401k plan assets like forfeitures, and that doesn't affect the company's general budget. It just has to be anchored upon retirement education. You can include wills and college and taxes and debt, but the majority of it has to be on retirement, and that's the reason the Department of Labor allows it. Anybody here work for the Department of Labor? Since this is recorded, I must say, please check with your plan sponsor and the Department of Labor before making any decisions regarding what I just said. Include with existing incentives. If you use the carrot approach or whatever you do, or one company years ago said, Travis, we actually use the carrot, and once we run out of carrots, we hit them with the stick. You can imagine that company wasn't very good with wellness. Whatever you're doing to engage your employees in wellness, do the same thing with financial wellness. We've seen passport programs where every employee that participates in a lunch and learn type program gets a passport or a stamp on their passport, and once they get so many, they get a big reward. We've seen people give out iPads, iPhones, all kinds of trinkets, or PTO. Whatever you're doing, there's no reason not to include it with the financial wellness program as well. As they engage, you can benefit and reward them. Coordinate all your benefits vendors together. Anybody here have wellness committees? I'd highly recommend it. It could be HR, it could be your vendors, it could be your Connell folks. Bring all your benefits vendors together. Trust me, they want to be a part of what you're doing. They don't want to be left out. And have them be a part of that wellness committee to help shape, inform, and make decisions on your wellness initiative. These are not just things for Fortune 500 companies. And if you've got 10 people and you're thinking, Travis, does this make sense for us? It does. It absolutely does. Bill Gates created a mammoth company because he started it with a vision in mind of growing. He treated it like it was a big 500,000 person company when it was 10, and they easily grew into it. All right, understanding financial wellness vendors. Let's switch gears here again. As I said earlier, it's an unstandardized industry. It's so hard for people to understand it. I understand that. When you talk about a 401k plan, you know who the players are. You've got the investment consultant, the plan advisor. You've got the fund to line up. You've got the record keeper, the TPA. You know who the parties are. But when I say financial wellness vendor, all kinds of different things pop into someone's mind. I'm going to help you figure it out. There are typically 4 categories. There's probably a 5th one out there too. A nonprofit. If a nonprofit ever approaches you and says, hey, we want to help you with a financial wellness program, why? Why are you approaching me and trying to get in the door? I have found that many of these 501c3, they are 501c3 nonprofit organizations, are actually financial advisors selling stuff, but they wear 2 hats. They come in your door wearing the nonprofit hat saying, I'm not going to sell, and as soon as they get in, the other hat comes off. They take off the nonprofit and they put the other one on. So United Way, their 411 program, pretty good. That's pretty good. But beware of the other 501c3 organizations that say they're nonprofit. Why? Just be honest with me here. Why are you guys doing this? All right, web-based vendors. Moderate cost. If it's web-based, you can do it anytime, anywhere. Some cons there. You could have lower engagement. If you are trusting somebody to do something outside of work, are they more likely to just relax with their family and watch their favorite show on Netflix, or are they actually going to engage in an employer-paid benefit? So there could be some pros and cons to that. Publication-focused vendors. This is where you order this big box of workbooks and books and magazines and all these things that your employees can do. If I told you I would give you a free package of workbooks and all kinds of stuff you could do this weekend to make better financial decisions, how excited would you be to do it? That's the last thing anybody wants to do over the weekend. Now, it's extensive info. If you want to go to the chapter on taxes, it's there. You want to go to the chapter on college planning, it's there. But again, engagement, there's no low to no accountability, and a lot of that information is free online. Don't pay for content. Never pay for content. You go to Google and you get 10,000 pages of free content. There's no reason to pay for it anymore. Education isn't the issue. If you want free content, go to mymoney.gov. mymoney.gov. Free government website, all kinds of goodies. Don't pay for it. Hotline vendors, cheap. This is the 800 number, like an EAP. And it's convenient, 24/7, you can do it anytime, anywhere. Some cons, again, we want to be proactive, not reactive. Let's prevent somebody from calling financial 911. So those are the cons. And then you have professional-focused vendors. You get direct guidance. You can help, that professional can help create a plan. Some cons, however, sometimes you're paying for people. You're paying for people, and that technology can be more expensive. And not all professionals are created equal. This doesn't mean if somebody isn't a CFP, they're a bad financial professional. I like seeing the letter CFP behind someone's name, Certified Financial Planner, because I know they must have spent at least 2 years of their life working to get that designation, because that's how long it took me. And it doesn't mean that their heart is bigger or they're better or whatever it is. I just know that they have a lot of knowledge if they went through it. In the same way, if someone has the exact same degree that you have from the exact same university, you immediately know the knowledge base that they have because you went through it. That's just my 2 cents on that one. So, bless you. So just watch out for the wolf in sheep's clothing with stuff like this. Are they selling or not? Get an honest answer. The last thing I'll say about vendors, anybody here do webinars for their employees? A big number of you? Here's the thing about webinars. We used to do webinars for all the companies we serve across the country. And in fact, Tom saw one of our last webinars. We were phasing them out over time. Here's the thing about webinars. You put these webinars together, you get a bunch of people at RSVP, half of them show up, the other half that show up are probably answering emails while you're on the webinar, right? And we've all done it while we've been on webinars. Here's what has replaced these webinars, and we started testing this about 2 years ago, and it's officially replacing them completely next year. Webinars are turning into a dinosaur. All video-based. Anybody ever been on a webinar that was an hour and you just couldn't sit through the whole thing? I can't either. We don't have that long of an attention span. Education should be video-based so they can do it anytime and anywhere on any device they want, assuming they have a device available. It should be 20 minutes or less. Don't do it an hour. They won't sit through it. A little cold, ma'am? It should be 20 minutes or less. And it should expire. It should genuinely expire. Anybody ever heard a radio commercial where it says, they're selling something, they say, call this 800 number, and if you call and the lines are busy, please call back later. Anybody ever heard that before on the radio? They do that a lot in advertisements in St. Louis. There's a gentleman by the name of Dr. Robert Cialdini. Dr. Robert Cialdini, who created this. He wrote a book called The Rules of Ethical Influence. And when someone hears this radio commercial, they think, if I call, lines are going to be busy. I need to call back later. Whoa, they must have a lot of calls coming in. Trust me, that line is never busy. But the sheer fact that we think there's that many people calling is the bandwagon effect, and we call. Dr. Robert Cialdini has produced some interesting research over the years, and we adopted some of his work. Video-based education, 20 minutes or less, and it has an expiration date. Why does it have an expiration date? We learned this from Dr. Robert Cialdini. If you give a video to your employees that says, this is a really valuable, impactful video, it's only 20 minutes or shorter, and you only have 30 days to watch it, are they much more likely to watch it in 30 days? If you give it to them and say, here's a video, I hope you have 20 minutes of free time in the next 10 years to watch it, when are they going to watch it? Maybe they'll watch it that first week, but if someone knows that it expires, it genuinely disappears, and they're never going to have an opportunity to watch it again, it triggers something in the mind to say, I don't want to miss out. That's why you go to Travelocity.com and you want to book a flight these days, and it says, only 2 left at this price. Oh my gosh, I can't miss that. And we book it. It's tapping into the psychological effects that happen from Dr. Robert Cialdini's work. Make it expire, make it short and sweet and to the point, and put it on video. That is the way that education is driving a change today. And if you, especially if you've got a couple employees across state lines or are spread out, that's the way you can make it balanced for everybody. Okay. What is the cost? Typically per employee per month. It could be a flat annual, and always watch out for someone who's doing it for free. There's a sales pitch in there, folks. I just hope they're honest about it. Benefits? We're going to cover those here. I'm actually going to zip through this one for today. Dr. Thomas Garman, a retired Virginia Tech professor, another rock star in the world of financial wellness. Here's what he found. He's retired now, but he did a program, a study, and he found a company with 1,000 employees. This is a manufacturing firm. Manufacturing plant. So they had some challenges with financial wellness. He illustrated a 312% ROI. I think it was a little steep. I think over 300% gets a little, how did you come to those numbers? It's a little steep, but here's what he said. Here are the benefits that he found in his research. The reason that it benefited the employees and the employer. Let me pick on a couple of these. Reduce Social Security payroll taxes. Hard dollar FICA savings. CFOs love to hear that. When I go home at night, I'm usually pretty hungry, and I look in the pantry and I say, honey, we don't have any food. And she goes, get out of here. We just went grocery shopping today. And all of a sudden, she cooks this beautiful 3-course meal. And I didn't see any food in there. Well, I'm not a cook. It's either the microwave or the barbecue grill, or I'm starving. Well, she is a wonderful cook. My wife makes some great meals. Oftentimes, your employees are looking at their budgets and their finances the way I look at the pantry. They say, well, it's great you rolled out this FSA, but I don't have the money to put into it. Oh, this HSA thing you're about to do, that sounds great, but I just don't know how I'm going to afford it. You're looking at your finances the wrong way. You're looking at the pantry the way I do. Here's what I would ask that employee. Do you get a tax refund at the end of the year? Well, in fact, I do. Why don't we just adjust your withholding through payroll so that less of that money is withheld, you keep it throughout the year, put it right in the HSA or the FSA, which is good for you and the company. You don't get a big tax refund, but who cares? Now you're using these benefits. I didn't think of that. It was right in front of them. And it only takes 5 seconds to figure it out. They're looking at the pantry the way I do. Nice FICA savings. How do you implement these programs? Plan on 3+ years. It's going to take a little while. Yes, ma'am. Oh, so what are the per employee costs? So I promise not to kind of toot our horns during this presentation, so I'm going to keep to that. I will give you an example of what some financial wellness vendors charge. You will see some of them are a flat $100 a month for a very simple program, so it's not per employee. And some of them with a per employee fee could be between $1 per employee per month up to $5 per employee per month. I'm sorry? You want me? Okay, she's asking me to toot my own horn. The $100 a month program is us. We have a program that's only $100 a month. It's for unlimited employees. It does not have the ability to talk to a professional. That's basic, web-based, video-based type of material, but very neat. If you want to go to the point where somebody can call and talk to a professional that isn't selling stuff, then it's going to be about $3 per employee per month. Correct. Yep. I mean, the question was for the recording was, do they get to see you in person? How many of you have telemedicine programs? Anybody? How, positive feedback? Good, bad? You like it? So far? Was it you, sir, that raised your hand? Somebody over here said yes. Yes, ma'am. Positive feedback? Your employees love it? Anybody else? Good? Yeah? All right, I'm getting a bunch of thumbs up. We trademarked teleplanning. We own that trademark. If you have an empty space in your workplace somewhere, you buy one of these things for everybody to share, they can literally go in and talk to a professional while they're on their lunch break eating a turkey sandwich, and they've engaged while they're at work. Plan on a 3+ year program. It's got to be all about your engagement and your culture. We actually talked to a pretty big national bank about a year ago, and this bank had a ton of 401k loans. I mean, their average 401k loan per employee was, I think, 0.6. So you do the math. I mean, they had a lot of employees taking out 401k loans, and they allowed up to 3 at a time. 3 at a time. It was a cultural issue. Somebody in accounting had done a 401k loan to buy a motorcycle or something, told all their friends about how easy it was. All of a sudden, all these people are starting to work, they hear about it. It was a cultural issue. It's going to take a while to change these cultural factors. Leadership must be engaged. Anybody do health risk assessments? Health risk assessments. Yeah, easy to do online. You hope they're being honest with you. Same thing can happen with a financial health assessment. It can be a little tricky if you're going to do this yourself because you're asking more personal questions, so I do recommend outsourcing it. But a financial health assessment might be this. Tell me how confident you are about your retirement goals. How satisfied are you in the benefits package? How confident do you feel about your current level of emergency funds? If you do that exact same survey once a year, every year, and you see that fewer people are stressed, more people have emergency funds, more people are satisfied in your benefits plan, now we're talking about turnover savings, we're talking about helping to retain people, we're talking about using the benefits more. That's where we want to get to. That's how we show value that the program is working. And if it isn't, if you've got numbers going down, what do we got to do to tweak it? FHA. Coordinate all your vendors together. I do recommend quarterly education. The once-a-year lunch and learn type thing just doesn't work. I know because that's where we started back in 1986, and it just doesn't work anymore. It's got to be quarterly education. I don't recommend any more than quarterly. I think quarterly is the right one. We talked about teleplanning already. Thank you, ma'am. And then incentives. Carrot, stick, both, whatever you do, make sure incentives are included in there somehow. Show me the ROI that CFOs want to hear about it. Let's talk about it before we wrap up here today. I like picking on baby boomers. This is one of my favorite examples. Let's just say we have 25 pre-retirees at a company. Unfortunately, about 80% of them are not prepared to retire when they want to retire. These are industry statistics. This isn't just us coming up with a number. Research it and you'll see the same numbers. So that means 20 people of the 25 are not prepared to retire when they want to retire. Now think about this for a second. If somebody is 60 years old, they wanted to retire at 62, and they have realized that because they postponed saving, they can't afford to do it. Now they're mentally checked out on the beach by 62 because they wanted to be gone. But they've got to work their 3 more years because they can't leave. Is that person good for your morale? Are they real productive anymore? It's probably not a good marriage for anybody. It's probably a higher earner relative to younger people. They're probably a little more expensive to insure. It's good to have older employees with experience, but once they have mentally checked out, it's not good for anybody anymore. They want to be gone too. There's a cost. So let's just say each one of these folks delays retirement for 3 years, and it's a 10 grand a year cost for some of the reasons I just said. That's $600,000 to that company. Even if you disagree with my math, cut it in half. It's still 300 grand. It's a lot of money. Finally, employers are realizing this since we have the baby boom generation retiring. 10,000 people a day. Real costs. I gave you the example of the pantry earlier. As you show people how to look at the pantry appropriately, yes, there's food there. You just got to know what to look for. Got to look beyond the microwave and the barbecue grill. They can use these things more, and as they do, it saves the company money. Turnover rate, you will find that as you implement this program, fewer people will leave for reasons of pay. If we show someone how to maximize the value of their paycheck, they're less likely to leave to get 5 cents more an hour at your competition. Show them how to maximize what they have in the first place. The only way to find out, though, if they're leaving for reasons of pay, is to do exit interviews. Please, please, please do your exit interviews and ask the question, are you leaving for reasons of pay? You will find that that should be curbed as you implement these programs. Wage garnishments, whether you have them or not, it could curb those as well. 401k loans. I'm not saying 401k loans are bad. I'm not a huge fan of them. But you actually can show somebody, here's the repercussion of taking this 401k loan. You can do it if you want to. It's allowed by the summary plan document. But if you do it, look at what this does to the next 20 years of your life. And once that person sees it and says, oh, I didn't think that far ahead. I was just thinking about the motorcycle. Now it changes behaviors. It's all about behavior change. Recruitment and media, if you look up the name of our company, you'll see all kinds of stuff for 6 pages through Google. Why? We do a press release every single month. Press releases are cheap. If we want to attract new employees and we're up against a competing firm and that employee is looking online for stuff, they're going to see all kinds of neat stuff that we do. Is our competitor doing stuff online? Who knows? The reason I say this to all of you is if you are doing really neat stuff for your employees, you got a neat wellness program, you just rolled out a financial wellness program, you're increasing your benefits package, brag about it. It's cheap. It is cheap. And when an employee is looking at you and your competitor, they're going to find all that stuff online about you. Brag about it. There's nothing wrong with bragging. You should see productivity increase as well when you implement these programs. When people are not stressed about their finances, they can focus on the job at hand. They don't bring that stress with them to work. ROI, review every 12 months. Make sure you're doing your FHA. Do employee satisfaction surveys. They're cheap and easy. And I covered exit interviews. Those are the hard dollar numbers we covered, and those are the soft dollar numbers we covered. The very last thing I'm going to tell you is we can talk all day long about ROI, but it's also about VOI. It's about value on investment. Years ago, we actually were working with a law firm that was in St. Louis. So since they were close, we could actually travel and say hi. And we did a program on wills and trusts. Now, why did a law firm have us do a program on wills and trusts? I'll never know, but they wanted it. And after we had finished the program, this young woman came up to us, and she was nearly in tears. I said, ma'am, what's going on? She said, I really wish you guys would have been here about 3 years ago, because that's when my husband passed away. And we had no idea that by leaving his life insurance to our kids, who were about 5 and 7 years old at the time, that money would be stuck in Missouri probate court until the kids were 18. And guess what probate usually does with that money? CDs. You know what CDs pay these days? Yeah. You know how much Missouri State tuition's going up each year? A lot more than what Missouri State pays. This poor woman could barely make ends meet because her husband was the breadwinner. And she just had no idea because no one had educated her. And she worked at a law firm. I can't calculate that. I can't calculate the value of finding and meeting somebody at the right time before something like that happens. You can't calculate it. It's not ROI, it's VOI. And I really hope that everyone could see that I have a lot of fun doing what I do, and it's because of hearing stories where we actually do change someone's life, and it's not about the return on investment. That's the other half of why people do these programs.
Travis, I'd like to thank you for joining us this morning. Very enlightening. Glad that was my second time of getting to see that and hear it. Every time you listen, you tend to pick up something new, so I appreciate you making the trip down here, and would ask that anyone who is interested in receiving that ebook, bring a business card up here, or you can come through myself or your Connell agent to get back in touch with Travis as well for more information. Please join me in thanking Travis for making the trip down here. We appreciate it.
Thank you very much. I appreciate it. Thank you.